What's up, YouTube? It's your boy Charles Enoch, and we are back with another Invest in Myself episode. So today we won't be on the board again. I got a lot of things that's going on, both good and bad. So I will be closing on another rental property next week. And my girl's family's going through a lot right now. So I just want to take time and be there for her and her family. So those that are watching the video, if you guys can just pray for her and her family, it would be much appreciated. All right. So today I want to go over my ideology when we're using the velocity banking strategy. Because I feel like a lot of you guys are not understanding what velocity banking is used for. But first, do me a favor, go ahead and smash that like button for me. I really do appreciate it. It helps me reach a higher audience base. So make sure to smash that like button for our brother. Also, if you are new to the channel, go ahead and take time to hit that subscribe button. I really do appreciate the people that take time to do that. As a small YouTube channel, you know my mission is to reach a higher audience base and teach everybody about velocity banking. So I appreciate it. All right, so first thing we need to understand is velocity banking does not help you save money. It helps you invest your money so you can increase your cash flow. Now, my first ever video is titled Only Dummies Save Money. Not saying that anybody watching this that saves money is a dummy, but it outlines my philosophy on velocity banking and why you should be investing. So when I see comments like, hey, this isn't saving me money, it's not designed to. It's designed to free up cash flow so you can invest it. So I'll briefly outline the concepts of velocity banking. Remember, if you haven't seen my first ever video, Only Dummies Save Money, it goes into deeper detail, but let me outline it for you. So we first need to understand how the banks work. So when you deposit your money in a checking or savings account, the bank is allowed to borrow your money and loan it out to other people. When they loan that money out to other people, they charge interest to make a profit. Pretty much an investment. So what the bank does to thank you for letting them borrow your money to make a profit is they give you a small percentage of interest back every month. So this is why we see savings accounts, they give you that 0.01 interest back, or if you have a high yield savings account, maybe you get like 1.5% back. But we have to think this is pennies compared to what they made from borrowing your money and loaning it out to people and making that profit. We also have to think about if inflation is 2 to 3% every year and you leave your money in a savings account and at best it's only giving you 1.5% every year, you're actually losing money and you don't even know. So in the grand scheme of things, velocity banking is actually a concept that mimics the bank and what they do. So when we borrow money from the bank in forms of credit lines, credit cards, personal lines of credit, home equity lines of credit, we then use their money to invest to increase our cash flow. Then we pay the money back that we borrow. When the strategy is done properly, we are paying minimal to 0% interest when we pay the money back. Similar to how the banks are paying you minimal to 0% interest when you have your money in the savings account. Now, I believe what a lot of you people are having trouble on is the difference between defensive investing and offensive investing. Now, I'll explain defensive investing first because that's the easiest one to comprehend. So basically, defensive investing is when you are paying off your debt. This type of investing is a guaranteed return because you're basically paying off your debt and increasing your cash flow. So for example, when we use a line of credit to pay off a 10% loan, let's say, then that's 100% guarantee that your cash flow is going to increase. And this is because you paid off the loan and reduced that monthly expense. So the rate on return for that investment is going to be 10%, pretty much the percentage of what the loan was charging you. Now, when we are paying off the line of credit, pretty much the money we borrowed to pay off the loan, we will be paying interest on that line of credit. Now, since we are paying simple interest on a line of credit, we are pretty much paying pennies compared to paying off the loan and amortized interest. This is similar to the bank giving you back a little money because they borrowed your money out of the savings account. Now, majority of my videos talk about defensive investing because, hey, majority of us have debts to pay. So now that we have defensive investing out the way, let's talk about offensive investing. So offensive investing is when you're investing into assets such as stocks, Bitcoin, real estate, etc. Basically something that's going to give you more money than what you put into it. So for example, one of my more popular videos, which has 2 parts, which talks about how to pay your mortgage with your credit card. And the reason why we would do this is to delay your mortgage payment 30 or even 60 days sometimes, to increase the cash flow, pretty much holding on to the money that you already have coming in. Now, the increased cash flow has a 2.5% fee from Plastique for borrowing money from the bank. Now, according to that video, if we use a 2% cashback card, that's going to offset 2% of the 2.5%, meaning that our fee is offset to 0.5%. Now, here's the key concept. The extra cash flow that you're getting because you're borrowing money from the bank to pay the mortgage, you have to use that extra cash flow to invest into something such as stocks, real estate, Bitcoin, something that's going to give you more than a 0.5% return, which honestly, that shouldn't be very hard. But if you're not investing that cash flow, then you shouldn't be using the method. You're going to be losing money every single month. So I hope this information has helped you gain a better knowledge about velocity banking and what we're using it for. And if you're looking to save money because that's your philosophy, then you may want to look on like some extreme couponing channel or some type of budgeting channel that will tell you, hey, take your lunch from home and bring it to work instead of eating out at work all the time to save money. Remember, velocity banking is about defensive investing, paying off your debt, and offensive investing, acquiring assets. And that's specifically what I teach on the channel. So again, if you have not done so yet, go ahead, smash the like button, make that thing turn blue. A brother appreciates it. I'm trying to reach a higher audience base. And if you are new to the channel, go ahead, take the time out, hit that subscribe button, hit the notification button. I really do appreciate the people that take the time to do that. And like always, hopefully you guys have a good weekend. Peace out.